Hi, everybody. This is Cornerstone Commentary, brought to you by the University of Kentucky Federal Credit Union. Here on this show, we speak with influential people in gaming, esports, and technology. Today, we're joined by Mark Jaeger, Vice President of Tax Operations at Taxact. We're going to discuss the tax implications for students and others with a focus in emerging gaming and technology areas. So, Mark, welcome to the show.
Glad to be here.
So let's start off, and if you could talk a little bit about what is Taxact?
Yeah, so Taxact is a leading provider of do-it-yourself and tax professional tax software. We provide all taxpayers, especially students, an opportunity to file their tax returns with the IRS and applicable state agencies.
That's great. So how can Taxact help students file those returns?
Hey, listen, IRS tax language is very difficult to comprehend and understand. So Taxact really specifies and simplifies this language to make it easy for anyone to understand a series of tax questions to complete and file their taxes. So we also offer expert help, which is free for most of the tax season, where you can speak with a CPA or EA about your tax questions.
I can attest to that. Filing your taxes and trying to understand some of that language is not for the faint of heart. So that's amazing to hear. And free is always great, especially for students. So on that note, what is the tax filing deadline this year?
Yeah, so it's definitely back to normal this year. If you remember the last 2 years, it was back in July and May. So this year, for most of the country, it's going to be April 18th. Except if you're in Maine or Massachusetts, you get an extra day to April 19th because of Patriots Day.
So that's the 18th. Is it because it falls on a weekend, or is some other reason? Because normally it's April 15th. Is that right?
Yeah, April 15th, which is a Friday, but because DC recognizes Emancipation Day, they move it back a day. And with it moving back a day, that's a weekend. And because it's a weekend, they move it to Monday, which is why it lands on the 18th.
That's great. So you can cram all weekend to get those taxes.
That's right. That's right.
So let's talk a little bit about students. When does a student have to pay taxes and file a tax return as a student?
Well, it's going to depend on their situation, right? So, everybody's situation is a little unique. Am I a dependent? Am I not a dependent? Do I have investment income? Do I not have investment income? However, we'll try to keep it in general terms. So my general guidance or the general thought is that if your income is below the standard deduction, which for this year is $12,550, you'd likely not need to file a tax return. However, I use the word likely for a reason, because sometimes what happens is you have these things called federal and state withholdings taken out of your income, and you're going to want to file a tax return in that situation because really you should get reimbursed for all of that money. So you don't want to just leave money with the IRS or with the state agencies. You want to get that back. So it's important to file a return to get those back taxes back to you.
So what is that, I guess, most common scenario where a student would have to file a return? Is it if they're working or if they're somehow, working on the side, have a job at the university? What kind of scenarios would they file?
Yeah, I think for most students, it's really going to be I received a W-2 or maybe multiple W-2s, right? Sometimes you're bouncing around between different places, depending on the seasonality of when you can work while also balancing schoolwork. So as a dependent, again, it's going to vary a little bit. But at the end of the day, most of the tax advantages when you're a dependent belong to the parent. Right. So even though you're going to school and you're getting an education, your parent is actually the one who gets to claim those deductions. But at the same point, it's going to be for the most part your W-2 filers, you just working seasonally at a place. But again, if you're a freelancer, maybe you're doing some freelance work throughout the year, that would be a situation where you may have the potentiality to actually file a tax return as well.
Yeah, I work with a lot of media students, and we actually send a lot of work their way. So yeah, it's there is a lot of specific majors where freelance income might be an opportunity. So if a student does earn money working a part-time job but is claimed as a dependent, like you talked about, on their parents' tax returns, how does that work? Do they still need to file a return?
Yeah, so we have this kind of saying, we like the DOTS candy at our office, right? DOTS. The abbreviation is depends on the state. So at the end of the day, a lot of times it just depends, right? Taxes just aren't as easily black and white as kind of most areas. So just kind of as we previously mentioned, if you had those withholdings and you fall under that standard deduction threshold of $12,550, strongly recommend that you do file a tax return in order to get that money back. But then as a freelancer, if you're doing some freelance work overall, you may want to file that return. You're establishing your business, with the IRS, with the state agencies. You really want to get in that pattern of reporting that income and reporting your expenses.
That's really good to know, because I had a student one time ask me, said my parents said I shouldn't file a return because I made less than the standard deduction. But it sounds like that might not be the case. If you had some withholdings, you might be able to get some of that back.
100%. That's right.
So, and speaking of freelancers, and especially in media production, we might have students that have bought a camera, for example, and then are generating some income using that. So can you talk a little bit about what is a tax deduction and what might be some common student tax deductions?
Yeah, I kind of look at it as tax deduction. It's an above the line tax write-off. So there's this calculation that happens on a tax return that says, tell me all your income and give me your adjustments, and then we'll calculate your tax. And then they'll do credits after that tax calculation. So that above the line is really that threshold of where tax is calculated. So a deduction, for instance, let's just say you make $15,000 in 2021, and that standard deduction that we've mentioned a few times is $12,550. It really reduces your income for the year that's reportable and taxable to the IRS down to $2,450. So that standard deduction is going to be the big one that everybody, for the most part, qualifies for as it relates to just filing your taxes each year. Outside of that, for students, there's not a lot of opportunities if you're not a freelancer, as an employee or you're doing that W-2 position. Again, we talked about a little bit earlier, is most of those deductions, most of those credits are actually going to belong on your parents' tax return for them to complete and claim those types of deductions overall. So the standard deduction is going to be the main one, and hopefully that would be good enough to help offset a lot of your income during the year.
So I've heard a lot, let's see. So after graduation, are there any specific deductions a student might take? I know I've heard a lot about student loan interest as being something I hear a lot about.
Yeah, student loan interest is a big one. So I remember when I got done with school, there was probably a few different things that I really took advantage of. Just to help reduce my tax liability. So student loan interest was a big one. You get that 6 month or so grace period before you really have to start paying back student loan interest. So maybe there's that chance in that first year you don't even have to make any student loan payments overall, but that is one that can actually be claimed as an above the line deduction as you head forward and start making those payments in the future. Another big one is this one called a retirement savers credit. So I'm a big believer, right, that once you kind of come out of school and you're really trying to set up your financial wellness kind of going forward, you should start to look at, if you're able to, contributing to a 401k or a traditional IRA or things like that. And the benefit of doing so is that, one, you can get that income lowered, right? It's a pre-tax deduction. So for instance, if you make $40,000, contribute $2,000 to a 401k, your income goes down to $38,000. That's reportable. And especially in those early years where maybe your income's a little lower, that retirement savers credit I mentioned could also qualify you for kind of double dipping, where not only did you get that $2,000 above the line deduction, but you may also qualify up to a $200 credit when you go to file your taxes each year.
I didn't know about that one. And saving early is always a great thing, because that compounding returns over time is a really great thing. So do you have any tax guidance specifically for recent graduates, maybe, let's see, that they should know or do from a tax perspective in starting their first job?
Yeah, I would say the first thing is just start to understand taxes, right? Taxes are all part of your life every single day. It's sales taxes, it's payroll, those FICA, Social Security, Medicare taxes, it's federal and state tax withholdings, there's gas taxes, there's taxes everywhere as it relates to what you do on a day-to-day basis. So it's really understanding what opportunities are out there that help you take advantage of those benefits that exist in our society today. So I just mentioned a little bit earlier, retirement, right? Time value of money, you mentioned that. So it's really important to start retirement because there are tax advantages to doing it, where you can start deferring your income and maybe wait to pay taxes on it when you retire someday. There are some retirement accounts that let you pay taxes on it now to avoid also paying taxes later. The other things that I'll throw out there is health savings. So for instance, a health savings account, right now you may be set up on your parents' health insurance, but someday you're likely going to have to get off of that. So a health savings account allows you an opportunity to invest in your own health. It's basically an investment plan that you can contribute to tax-free, where, hey, if you don't spend a lot of time going to the doctor or you don't have many needs to go to the doctor, that those payments you're making to a health savings account keep accruing and accruing and accruing over time, where it can get you to the point when you can get on Medicare when you go to retire someday. So it's just understanding what those tax advantages accounts are and how you can best utilize them now that you're starting your career.
That's great information. So we are going to pivot to a topic that I know a lot of our viewers are interested in, and that's esports and gaming. So there is a lot of evolution going on at University of Kentucky, but across the gaming space, where there's new income opportunities and revenue generating opportunities in the esports and gaming space. And one of those is if I'm making a living, maybe streaming or as a content creator on Twitch or YouTube, and I'm generating revenue from that, is that taxable? And then I guess a follow-up would be, if I have any expenses associated with that, could those be tax deductible as well?
Yeah, so the answer to the first question is 100% yes. It is taxable income. You will have to pay tax on that income you earn from that given activity, from esports. Now, you really have to think through to say, am I a professional? Is this kind of my career? Is this my business that I'm doing going forward, or is this more of a hobby or a recreational type item? So if it's a business, right, you will claim this as a business income on what we call a Schedule C when you go to file your taxes each year. And those expenses, as it relates to your business, will be tax deductible so long as they're ordinary and necessary overall. So that is one of the benefits of calling it a business. Now, there are certain taxes you have to pay at moving into a business. There is a little bit more completing that Schedule C. It's going to take a little bit more time to complete that information, but the revenue you get from it, the expenses that you have from it, can help offset some of that income. Now, to go to the flip side and say, is it hobby income? Is it more recreational? Hobby income still taxable. You still have to report it. You don't necessarily maybe have to pay those FICA taxes, those Social Security and Medicare taxes that we talked about earlier. But at the same time, you don't really have the opportunity to write off those expenses, like your computer, like your game console, so on and so forth, unless you itemize your deductions. But the hard part about itemizing your deductions is you have to have so many of them. So I think we talked about it a few times, with that standard deduction being $12,550 for a single person this year. Your itemized deductions, all those expenses, have to exceed that amount before you can actually start claiming itemized deductions overall. So it's very, very hard as somebody who's doing this recreationally or as a hobby to be able to claim those expenses for esports.
Gotcha. But say that was my primary profession, or I'm generating significant revenue from that. There is a potential I could deduct the computer I use to stream, or if I'm using it a significant amount, maybe a game console, if that's associated with that business. Is that correct?
That's 100% right. So I know a lot of people get nervous, right, around these expenses and what expenses you can claim and what expenses you can't claim. It's a gray area. The IRS is saying ordinary and necessary for your business, right? Like if you hire somebody to watch your dog for esports, you have to make a claim that's ordinary and necessary for you running your business. So that would be a tough one to claim. But for instance, that TV monitor, that computer monitor, internet, video games, all that, like that's ordinary. Like you need that. That's necessary for your business to be good at what you do in order to make the income that you're looking to make.
That's awesome. So we've held a number of esports tournaments at the University of Kentucky. There's esports tournaments going on around the country, around the world, at any given hour of the day. A lot of these tournaments have cash prizes or maybe even merchandise as a prize or physical goods. So say I win a tournament and I win a cash prize. Do I need to report that prize on or those winnings on my tax return? And then if so, how would I value something like a physical good if I need to report that?
Yeah, that's a great question. So first and foremost, the answer is still yes. Like I feel like I'm the bearer of bad news right now overall. Now, this could be reported to you a little differently. And again, I go back to, are you a professional or is this kind of a hobby income? So the University of Kentucky, as it relates to those esports winnings or prizes, may issue you a 1099 MISC form that ultimately reports what that cash prize or reward was. Again, that would be claimed on your taxes, depending on the value. It would be claimed on your taxes, and then you would report it overall as income on your return. If you're a professional heading into this, again, you would still report it on your return, but you would be able to offset some of the expenses, just like we mentioned previously. Now, if you get a physical good, like a video game console, like, hey, congratulations, here's the new Xbox, you can have the Xbox. You have to figure out what the fair market value of that is. So how you figure out the fair market value, sometimes you get an appraiser. In this situation, you probably don't need an appraiser to tell you what a fair market value of a new Xbox is, because you could just go out to Google, you could go out to the Microsoft, the Xbox sites, you can go to Target and figure out what the value of a new Xbox is, and then use that for purposes of, hey, Xbox is worth $800. I have to report an $800 gain on my taxes.
So if I'm competing frequently and say I'm on an esports team and we're traveling, could we potentially have tax deductions? So say I'm traveling to tournaments, we might have team uniforms or meals that we have to purchase while we're at some of these tournaments. Can that offset any of those winnings?
Yeah, if you're a professional esports team or you're supporting a team that's a business or professionally done, yes, 100%. Those things are deductible. And the nice thing about meals this year is that they actually increased it. Normally meals are only about 50% deductible in prior tax seasons, but for this year, it's actually 100% deductible for those meals. So again, it still goes back to that designation of, are you a business? Are you doing this professionally? Or are you doing this recreationally or as a hobby? So if you're doing it professionally, that's the benefits of filing a business return for this, the Schedule C that we mentioned. You can actually claim those items as expenses on your return. If it's more hobby and recreational, unfortunately, you're not going to get much of an opportunity to claim those as expenses.
And I guess what an additional question would, where do you draw that line, or how do you kind of differentiate between the hobby versus professional? And for example, we have students on an esports team in an esports club. Week in and week out, they're competing, but that's not necessarily a full-time job for them. Where does that differentiation take place?
Yeah, I kind of look at it as, do they see themselves doing this more on a full-time type basis, right? Like if they're just doing this while in school, but they're not really looking at it on a going forward basis to be able to keep moving forward with this process or keep moving forward with this, with the esports in general, then it's more of a hobby. Like they're just doing it. Like I'm mainly going to school. I'm really here to get my education, but I'm doing this on the side. Like that can be treated more as a hobby. But if they're thinking, oh no, I may start a YouTube channel. I may go do some of this other work. I'm still going to join these tournaments every weekend. You may want to at least start thinking about claiming this as a business, and then just kind of understanding how your income's coming in versus the expenses you get to claim.
So let's say I'm a instructor. I actually do teach a class myself, and it's video game oriented. We do live streaming of video game content. And let's say I have an expense associated with that class. So I've purchased a video game console or a video game that I utilize in the class as part of my job. Is any of that potentially tax deductible?
Yeah, so if you're in faculty and you're an employee for where you're working, unfortunately, the answer is no. So back in 2018, as part of the tax reform changes, they got away, or they got rid of a lot of those unreimbursed employee expenses where you could have claimed those as deductions in the past. So that's when that situation, you're left with going back to your employer, which may be the university, and saying, hey, I need to buy this Xbox, or I need to buy, this equipment for this. I would really like to be reimbursed, or I really want you to help pay for this as an institution kind of going forward. Now, I say that, but if you're an independent contractor or a freelancer being hired by the institution, being you're an independent contractor and you're purchasing that data, you're your own business as an independent contractor, you're the business, and you would be able to claim those expenses on your tax return.
I'll have to talk to somebody at UK to get them to buy me an Xbox.
That's right. That's right.
So we're going to pivot again to another topic, a technology topic that is really big in the tax space right now because it's emerging and evolving every day, and the laws are changing, and that is cryptocurrency, both on an investment side and a generation and mining side. So we'll get right off, we'll set things off with, if I've profited from a cryptocurrency investment, how would I report that on my tax return?
Yeah, so it would be reported just like any other investment. So think about if I buy 100 shares of Google and I sell those shares and I make $100 gain on the sale of those shares. You're left with reporting that as a capital gain or loss, and it could be short-term or long-term. So let me break that down a little bit. Short-term gains, like if you held it less than a year, right, it's taxed at an ordinary income rate. And then if it's long-term, meaning it's held for over 1 year, you usually get a reduced tax rate on that gain. So it's important to think through that in case you're trying to reduce your taxes on that. But really the main thing is it goes on this Schedule D as investment or capital gains or losses. And then it's just understanding what your fair market value was in the crypto or whatever you purchased at that time when you first bought it, and then what your fair market value was when you sold it to understand what your gain or loss was.
And is all of that true whether I've used Robinhood or Coinbase or maybe a decentralized exchange?
Yeah, some of those may do a better job of helping you keep track of your basis or that fair market value when you purchased it versus when you sold it. But at the end of the day, yeah, it doesn't matter where you got it from, you would still report that gain or loss on your taxes.
So if I have used multiple decentralized exchanges or platforms, what is the best way to kind of aggregate all of those gains and losses so that I have a final number?
Yeah, so you mentioned it earlier. Hopefully we're getting to the point in the next few years where the tax industry and these platforms or these trading platforms are starting to work together a little bit closer, where they can actually automate some of this stuff for you all, but we're not quite there yet as an industry. So there may be some things that these sites provide you. It could be a CSV file that reports maybe your purchases and your sales overall that you could potentially export into tax software. I would say the main thing I would recommend is just, you really have to group them, right? So group your short-term gains, group your long-term gains, because that's how it needs to be reported with the IRS on the Schedule D. So it's just keeping track of, hey, this is each time I sold. You might be able to at least say if I sold crypto 15 times during the year and they're all short-term gains or all the short-term losses, you can add up your cost basis, you can add up your sales price, and then just lump it all together into one transaction for the IRS. But again, you want to make sure you separated out any sales that were short-term or any sales that were long-term.
And so let's say I'm mining cryptocurrency. So I'm actually taking a computer, whether it's a graphics card or a CPU, and I'm generating that cryptocurrency. Is that treated like income, those rewards I receive? And if so, how do I decide how much to claim on my taxes or how much to report?
Yeah, so as soon as you get, if you get some sort of receipt or on the day of the reward that you actually get, you really have to look at what your fair market value of that crypto is right then and there, right? So for instance, if your reward is, I'm just going to make something up, $100, you now have a taxable event of $100 that you need to report as income on your tax return. Now, you could hold it, right? That's just one tax event that happens. Now you could hold it. You already reported the $100. And then as you hold that asset, really is what it is, the investment, the crypto, and maybe you sell it a year from now or 2 years from now, you got to remember that fair market value at $100, we said just a little bit ago, and then maybe it sells for $1,000 a year or two from now. So now you got the difference, which is $900, which is another gain that you have to pay when you go in the year that you sold that asset.
This is getting more and more complicated. And to complicate it even further, if I had hardware costs associated with that, like let's say I bought a computer to mine the cryptocurrency, um, or utility costs, it takes electricity. Could those be tax deductions against those earnings?
So typically, no, unless you're in the business of doing this. So if you're in the business of doing this all goes back to that previous conversation. If this is a business for you and you determine that you're going to handle this as a business, then the answer is yes. But I think I would imagine for most of the population, it's more of a hobby, kind of recreational. And at that point, that would not be a tax deduction for you.
Gotcha. So to complicate things even further, the IRS doesn't seem to be doing us a lot of favors in this space. And here recently, there's been a case, Jarrett versus the United States, that seems to have some ambiguity around the taxation of something called staking rewards, which is potentially locking up some of your tokens or your coins and then receiving a reward because of that. If an individual has these staking rewards, what should they do without having that clear guidance from the IRS right now?
Yeah, so my general advice, just to make sure that you feel like you're on the right side of it, right, is always to report it as income, right? So whatever that fair market value of that reward was on the day you received the reward, it's probably always in the best interest to report it, because you're deemed in good faith of doing what you should do, as it relates to any type of income that you receive throughout the year, right? Now, you've mentioned it. We don't necessarily know where things are going. The IRS is still trying to get their head wrapped around crypto. They're trying to better understand how many people are even dabbling in crypto across the United States. But at the same point, if you're just trying to get yourself on the right side of legislation or the IRS ever coming to have a conversation, right, it just shows that you tried your best, or you did what you felt like you needed to do to report this income on a tax return.
And will they give you some leeway? Like if you in good faith made an error, do they give you some leeway in that space?
That's 100% right. I mean, they definitely delineate between what they consider negligence versus, hey, I just tried my best. This is what I was trying to do. I got this reward. I figured the fair market value at $150, and I reported as income on my return of $150. They may determine that it should have been valued in some other way, where they say, no, you probably should have valued at $250. But from that standpoint, they will give you the leeway. Sometimes they'll avoid any interest or penalties because of that, because they know you're trying your best to get it right with limited guidance, quite honestly.
And kind of one of the hottest topics in cryptocurrency right now are these non-fungible tokens. It's like an asset, a digital asset that has been entered on the blockchain, some of which they think of CryptoPunks or Bored Apes that are hitting this mass media popularity, are selling for hundreds of thousands of dollars or more. But there's a lot that might be valued significantly less. So if I ever received an NFT for free, how should I value that asset, especially if there's no transaction history?
Yeah, it may be that and this is where it's all still fairly new, right? But again, with any other asset, just thinking about any other investment like a painting or anything along those lines from any period of time, right? Typically an appraiser could help. But at the same point, the IRS does allow that, hey, if there's a NFT basically out there that's very similar to yours in some nature, I know that's not always that easy, because like you said, some are valued really high and some are valued really low. You're just trying to find something that's most like what you have, and then you can take that as your fair market value for what you should value this asset as.
That's fantastic. Well, that kind of wraps up all the questions I have. Did you have anything else that you think students should know, or any new emerging technology stuff related to taxes?
No, I would just say that there's help's always there. For instance, Taxact offers that expert help, as I mentioned previously. So all these conversations are new and emerging, and we have CPAs and EAs that are available to help with those types of questions. So the big thing I would just say is, it may seem daunting. You hear the IRS, there's always these acronyms, these three-letter acronyms out there around the IRS. But nonetheless, they're friendly. We know them. They're a good group. They try their hardest. But at the same point, taxes can feel daunting, but you can have the convenience to do it yourself. It's not too difficult as a student.
Well, that's great information. I thank you so much for joining us. This is Cornerstone Commentary, brought to you by the University of Kentucky Federal Credit Union. My guest today was Mark Jaeger. Thank you so much, Mark, for joining us.
All right. Thanks, Alex. Glad to be here.
And tune in next time where we'll talk with more people in the technology and gaming space. Thank you.